not just sports cards, but what is kind of an advice that you have for younger investors? So if you're getting into sports cards or investing, what is something that you would tell somebody?
Yeah, that's a great question. So I think just trying to learn as much as possible before going in is a great way to start. Whether that be for the investing side, I did a lot of using like Investopedia. So they have simulations you could get, I think maybe like 10 or $100,000 and just, trade. So I think it's a great way to start for say a month.
Yeah.
Just see how you're going to do instead of going out and putting $500 into the market. You could put that 500 fake money and see how that money would have actually performed and say, okay, why is this going up? Or why is this going down? Instead of actually going out there and necessarily losing 15 or 20% in the course of the month, and then kind of evaluate, okay, what went wrong, what went right, and say, yeah, it did go right. Like, okay, I might have made some extra money if I actually put this into real stocks. But I think just to start, I think it's a great way to kind of just learn before you kind of, walk before you run in a way. And I do a lot of, research. I'm always on Yahoo Finance looking at, what's current and what's going on in the markets. And I did study accounting, so I have a good understanding of like financial statements. But just like, going on YouTube and just trying to learn about all that stuff could really help as well. And before you really start to dive into investing, definitely patience. Once you start, I would definitely try to stick with the strategy. Say, hey, I'm going to invest $15 each week or $20 each week or $50 a month, and kind of stick with that and kind of just see why are you doing this, or is this manageable? Can I go up? Should I be going down? And just having a game plan before you really get into it.
I like that too because, frick, I was talking to some of my buddies about it, and I'm like, "What's your list of investments in sports cards?" And most people don't have that. I didn't even have one, and I think making a list is really
Mm-hmm.
important because then when something comes up, you just do impulse buys. You have
Yeah,
like FOMO's real, man. Like
it
fear
is.
missing
Mm-hmm.
out, especially when what was it like? Bull had a big game. Like I wanted to buy
Yeah.
his cards. I'm like, but you got to be smart. You have to be strategic. For me, what I
Yep.
do is I try to do like I'm more high risk, but it's also a calculated risk, right? So like when I'm investing into Tatis, like well, I was buying him at like $10 with
Yeah.
Bird. So like for me, it just made sense, right? Like if he's even going to be a mediocre player, he'll go up in my opinion. And plus the
Mm-hmm.
market went up, so I've been lucky. But the way I look at it is I do 50% safer, like LeBron James.
Yeah.
I'll actually get like better Canadian stocks and stuff, but then also put 50% into high risk. But my
Yeah.
high risk, what I'll do is I'll make a list of like 30 players, and then I will keep shrinking it down because the best way to do it is to swing at the best pitches, right? If you're
Mm-hmm.
swinging at bad players all the time, you're
Yeah.
going to
You're
have
gonna
bad
miss.
hits.
Yep.
You're going to pop
Definitely.
out. But
Yep.
if you can swing at Acuna last year or by Luca 2 years ago,
Yeah.
you're going to win. So
Definitely.
that's the way I look at it. I don't know if that makes sense, but
No, yeah, I like that. Mixing in, the surefire guys with that the high risk, and then having that high, a certain amount of guys you would target, and then minimizing that to who you think is even more secure in that pool of players.
I
Now,
mean,
to answer your question about the marijuana industry, I actually have one stock that I do invest in that's done very well. If you want to check out the ticker symbol, it's IIPR. It's actually a REIT. I think they're based out of the West Coast,
the
probably predominantly.
marijuana REIT?
Yeah, real
What
dude,
the
things
heck?
done very well. So they own and operate the farms or whatever where they grow, and really cool concept. Pretty safe when it comes to that side of it, with also the growth that's going to come with that industry. So they've done very well. They also pay a dividend. I think I'm up maybe 80 or so percent on that one.
That's big for a stock.
Yeah. So that's one I do invest a little bit in Aurora too, just because it's so low. So
Okay.
I'll take the risk on it at this point.
What's
Yeah.
going on with Tesla? Do you like it as an investment?
I do own a small portion of it. So I use like an M1 Finance portfolio where you can get fractional shares and kind of set up like an allocation between however many stocks you want to invest in. So I started this account, I think maybe a year and a half ago. And the whole intention was to build up a share and position into Amazon and Google. So I initially started at 40% of each. And then the remaining 20%, I think, was to 10 remaining stocks. And then as that position built up pretty decent, I decided to reduce those. So I think 10% each. And then I added, I believe, another maybe 10 or so stocks in there. So I did add Tesla into that, like a 4 or 2% allocation. So I think I have like $300 or so into Tesla. So I do, it's like a very small position, but I do like to get a little exposure to it. But from a pure valuation standpoint, it has to be overvalued just based on their price to revenue is like 15, which is like crazy high. I think Apple and Amazon are like 10 or so. And their annual revenue, I on the top of my head, I think it's 27 or so, 27 billion. I don't even know. I'm trying to think exactly. But I know Walmart per se is like hundreds of billions. Yeah. And they exceeded Walmart in market cap. Granted, Walmart does not have the growth potential that Tesla has, but on a cash flow consistency basis, like to be valued more than Walmart is pretty mind-blowing in my mind.